U.S. dollar daily forecast, September 3rd, FXEmpire.com. The U.S. dollar index had a bearish session on Friday, as you can see by this candle. And in fact, the interesting thing was that it not only had a bearish session, but it crashed into the 81 handle, which was the bottom of this gap. So, if you had shorted this gap on the idea that gaps eventually close, you finally got your trade at the end of the summer to close out. However, these gaps typically do offer support, and as such, it makes sense that we saw support here. This is exactly where you'd want to see it. And the fact that 81 caused a bounce of 25 ticks into a hammer shaped candle suggests to us that perhaps we are going to bounce. On a break of the highs from the session, it does look like we could start grinding higher towards the top of summer consolidation at 84. We aren't necessarily calling for like a multi-year move here, but just a simple continuation of what's been going on. Quite frankly, the dollar is one of the safest currencies around the world, and even though Ben Bernanke suggested that further bond buying couldn't be ruled out during his Jackson Hole speech on Friday, the dollar sold off, but you can see it held quite firmly, considering this should have been the signal to crush the dollar. So, having said that, we do feel that this is probably going to end up being a bullish move, but if we manage to break down below the lows, anything significant, especially maybe I'd say 80.50, then you start to talk about selling off the dollar, probably down to about 78, where you see serious support again. However, though, it does look like the dollar is hanging in there, and as such, we actually did put on a very small position to go long.